Hello, this is Crypto Marmite and welcome to my Bitcoin review on the 21st of March 21. We're going to be reviewing Bitcoin short term, long term and looking at some on-chain data to see where we might be going. Okay, so let's get into it. So immediately I'm going to be looking at my scanner here that I set up. I have 30-minute, 1 hour, 4 hour, 6 hour, 1 day and 3 day charts here, along with the moving average template that's free in TradingView. Also have an on balance volume indicator here just to check for any signs of breakouts on volume. So as we can see, short term we're attempting to change the 30-minute trend. Same with the 1 hour. We're getting into a bit of chop on the 4 hour. The 6 hour also in some chop and sideways ranging. The 1 day is in an uptrend, that's still intact, and the 3 day is looking healthy and bullish still. So long term, 3 day bullish, great, no signs for concern there. The 1 day just tapping off resistance, looks good to me. But we've got some warning signs because of these in the short term because of these early drops. However, 30-minute, 1 hour look like they're trying to recover after the drop, so we could be about to change. I'd like to see this all the same across the board. That would be telling me to have confidence in going long. Again, if it's all below the moving average, that would give me confidence to go short. I wouldn't be going short in this market. I'd only be looking for long entries and buy the dip opportunities. This looks like a short-term buy the dip opportunity if you're looking to trade sort of intraday. This could be a nice bounce. Same with, and the 1 hour gives weight to that volume. Gives weight to that call. So I'm looking at sort of, if that's green, if this is green, and we're moving up and we get above here, then trend change, momentum's changed. Let's go. But as it stands, long term, 1 day is bullish, 3 day is bullish, 6 hour a bit of warning, 4 hour a bit of warning, and 30 and the 1 hour looking to change the trends. So some opportunity could be coming. Okay, so onto the weekly chart then for a general health check. As you can see, we are in an uptrend. We've got higher highs, higher lows, higher highs, higher lows. We've actually made a higher high here. We could be looking to make another higher low with this week's candle closing this evening. So we'll see how that pans out. Current levels of support and resistance on the weekly, well, we're looking at 51 for immediate support. And we're looking for a close above on the weekly to continue the uptrend of 59,000. Okay, going into the daily chart, we seem to be forming an ascending or rising wedge pattern, which we've just had some confluence off of today, hitting that exactly here. These can break to the downside. So I would be worried about any sort of break of or any sort of close below this 55,357 level. Any sort of close below there outside of this trend line, we risk going lower. So you could be looking for shorts. I won't be looking for shorts because it's a bullish market. I think it's risky to play a short game. Instead, I'd be looking for momentum to upside after that short has played out. Where could we see this going? Let's run a fib on that to see. We got 61. We could be looking at a retracement of around about 50 to 47,000. Should that fail to break out, that's where I'd expect support to hold up. We also saw we had weekly resistance around the 51,000 mark. So again, this sort of zone here should hold up should we fail. Okay, let's look at some potential upside targets. Okay, so potential upside targets, and we can see here we've got some very good confluence from this fib extension. So pulling this up to the last decent swing and retracement, we can see that there's some good targets here around the 100% level at 72k and 100k in the short to medium term. So I'd be expecting these levels to be hit on an upside target up here, maybe take some profit, maybe go sideways for a bit, then a pop up to go for that 100,000 target. So short to medium term targets. Should we get this thing moving in the next couple of weeks? I mean, especially for the 72k. I mean, you can see that we've got some room here within this ascending wedge to actually play that move out within the next week easily. That could be hit if things really get going. So next couple of weeks are going to be crucial to see if we do have the momentum to push that up further. So 72k in the short term, hopefully 2 to 3 weeks, maybe the next month, and then a short-term downside resistance of around about that 51 to 47k should hold up. Okay, so let's have a look at some on-chain data just to see general health of the market at the moment. Stock to flow model by Plan B, and this is on lookintobitcoin.com. A great tool for looking at on-chain data and other working models that have been produced by various people. This is free to access, just the basics, but there is a subscription model. I don't use that for what I'm doing today, but you're welcome to have a look at the website. It's great. Got some great resources here, really useful stuff. So stock to flow model, this is Plan B, famous Plan B's famous long-term model on Bitcoin and how it should be performing. And as you can see, it's overperformed, but generally stuck to this model variance line that's been drawn. So the way I am interpreting this is last bull run we saw an overperformance from that model variance line, and we pulled back, got into the bear market below it. So we're establishing some actual fair value around about this line before we enter the next bull market. So you can see that we're actually looks like we're slightly overperforming the model variance line at the moment, which is saying to me that we're moving faster than previous cycles, because previous cycles on this side of the line, the indicator actually lagged. So things seem to be moving quicker this time around, which it feels quick as well. It's felt very quick and strong, getting up to this 60 odd K level. So that rings true. This 100,000 target he's got well off in the distance here. 85 to 100,000. I think we could be seeing 100,000 sooner than that. Maybe June, July time. Certainly this year. And what this model does say is that this model variance line isn't the actual top. So you can see the overperformance here in the last bull run, where we actually the model variance line from the stock to flow was actually at $5,000, and we actually popped up to 20. So that to me says we could be popping up here to well over the model variance line, which is currently sitting at between 85 to 100,000, and then we could be popping into the realms of $400,000 to $500,000 Bitcoin, and then we could be coming back to the model variance line to find that fair value for the next bear market to come into play, and then the next halving to kick off in 4 years' time, where we go again. So stock to flow on track, ahead of schedule, looks good. Let's go. The Pure multiple, another interesting on-chain data chart. You can read all about this in the GUMP that they've put below here, explaining how it can be used. But in simplistic terms, This red line, when it enters the red zone, it's a warning sign that we're reaching the top of the market cycle, and it's going to be a good point to sell your coins. So look here at this is the 2011 top. We well overextended the red zone. Same in 2013. We hit that twice, and it was good points to sell. December 17, it was very accurate, exactly on the top there. And at the moment we're showing that we've still got room to go. We're not quite there yet. That rings true with the stock to flow model there, showing that we still got room to go. So I'm happy at the moment, but I'm keeping an eye on this. This is going to be my macro tool to give me a red flag as to when to pull coins out of the market and take some profit. But not selling at the moment. Looks good to hold on short to medium term. 200-week moving average heat map. Again, this is a good tool for finding out bottoms in the bear market. A long way off yet, but you can see it does call the bottom very well. We'll be looking for that later on, but interestingly, you can see this heat map of the bull run. It's only just getting going on this chart, which again shows to me that there's still some room to get going before we get overheated and too extended from that 200 moving average. So good. Shows that we've got bullish momentum and that we've still got room to go. Again, confluence with these two other charts that we've just looked at. Pi cycle top indicator. This indicator here is great for showing cycle tops. It's usually when the 111 DMA and the 350 DMA crossover, that can predict a good time to sell your coins. So if we look at the last bull market here in particular, it picked it within a few days. It was a great sign. It's certainly something that I'm going to be looking out for as something to use to say, yeah, potentially should be a good time to sell. So we've got some good tools there with the pure multiple red flag could come up. And then we've got the Pi cycle top indicator, this crossing over, another red flag. So looking for those two, it'd be a good time to get out of the market, as we could be heading for a big dip or end of cycle. And Bitcoin logarithmic growth curves. This one again, I like this one because it shows the momentum over a long period of time, sort of not going so steep, going up gradually. And you can see early days of Bitcoin really steep, really volatile up, and then now it's sort of just easing off more as more players, more money, more volume is required to move the market. So this one is it picks good tops, and it picks good lines of resistance throughout the market cycles. Looking here, we're currently sat at 58,000 line, and this is saying that the high could be around 100,000. So I think we're going to be going higher than that. But again, this is a good chart to look at to see if we're on track this bull run to hit targets. And this again is showing that we got room. So all these are giving me confidence that we're not quite ready to get out of the market yet long term. We should be holding on to our coins and making some money. And this trend line exactly, and we're looking to make that reversal. That's ringing true with the momentum we're seeing on the scanner here. Just trying to push through. When we get some clearance over on the 30, I'm starting to look for bullish. A close above here on the 1 hour, and it'll be happy days. Let's get going. So marking up the chart here. I'll just get the range that we're currently trading in. Okay, I like to take the high. I like to take the high that we the high versus the next low that we hit, and that gives us the 50% line in the middle here, which is denotes the top of the range between the 100% and 50%, and the bottom of the range between the 0% and the 50%. So as you can see, we're clearly ranging here. And what I do is I add on these extra lines outstretched. There's no science behind it, just 25% added on, which shows liquidity zones to either buy or sell in these areas. And as you can see, we come down. I would have tapped the range line here, and then the next line we've tested it here, but then we go for a liquidity grab outside to get these stops. Then we come down and we can take another liquidity grab to grab these stops. So great way of trading ranges in the short term, and useful tool. We can also look at the weekly VWAP and the session VWAP, which is run off the daily. In an uptrend, as we are now, this is a useful tool for entries. We're currently in a bit of chop, but you can see we have respected the weekly VWAP here, come up, bounced off it, and now we've broken down to take the liquidity of this stop off the trend line, and we are trying to build that momentum for a reversal. So as you can see here, when you're in a clear uptrend, this weekly VWAP shows some good strength and some good opportunities to buy the dip. So I'll be looking for the same here. I'm looking for this area, this area here to start closing above the weekly VWAP, and then trending up, bouncing off it as we go. That's what I'll be looking for. So we've got similar situations here. Once we start showing strength here and holding that weekly VWAP line, and the momentum indicators here show strength through to the 4 hour, I've got some confidence to be entering long and holding up some short-term leverage long positions. Okay, and next up, I just want to take a look at funding rates, which are only really high on Bybit at the moment. Anything over 0.1 shows that we're extended, and longs might need a reset on the position. So this is basically a fee that positions have to pay for keeping their orders open, and when this gets extended over 0.1, it can mean that the market may need to reset and cool off a bit. So at the moment we're only high on Bybit, which is retail. It's expected at the weekend because there's a majority of retail traders at the weekend. And again, this may need to be reset because we're starting to get overextended over 0.1. But across the board, it's not too bad. So going into next week, it looks pretty good. We might see some fuckery at the moment to reset these retail traders back to zero. But on the whole, it looks bullish. We can also look at some on-chain data. I forgot to go over this, so I'll just quickly look at miner outflow to exchanges. So we've got some good charts here which show whether the miners are actually transferring their money to the exchanges. Currently, they're not. This is a good sign because it means that the coins aren't being taken there to be sold. We've also got an MPI flow indicator, which tells us if we're over 2, that the miners are likely to be selling off their coins. We're not. We're well below that, 0.07. So again, good confidence that short term there's not going to be any heavy selling by the miners at the moment. The other indicator that I like to use on here is the miner reserves, which shows the balance of miner reserves, if they're increasing or decreasing. Increasing means they're still holding onto their coins, so that's good. They're not selling. However, long term, we have to be mindful that these large reserves they are building up will eventually hit the market, and when they do, that is when we are going to get some capitulation and carnage potentially, and some big dips down. So be very mindful of these reserves. Yes, it's good, it's going up, but long term, it needs to be hitting the market with those coins because they've got their fees to pay for, and we could see some big reversals in price when they start doing so. Okay, next. Just wanted to have a look at ExoCharts, which looks in depth at candles volume traded. Gives you a bit more data than the traditional forms. Let's look at a like for like. We've got a 4-hour chart here. Let's take off those. So we've got a 4-hour chart here. If we look into the detail on this chart, we can say the volume at the moment on this candle is giving us this volume. It's bullish, or it's bullish or bearish. This one's showing it's bearish, and it's this much volume and it's closed bearish. That's great, but it doesn't tell us where and what volume was traded on each price level. So what I like to do is have a look at exo charts to see where the volume of price has been traded. As you can see on a 4-hour chart here, let's load that up. Okay, 4-hour candle here, which is that same candle we were looking at. This tells me that the majority of that value on that candle was traded in at around about 56 to 55.8k, and you can see there's extremely high volume compared to the rest of the candle here where it was traded there. That tells me there's a lot of volume, a lot of interest trading at that value. So we could see a return to that position at some point. Now we closed here and then we opened here and then we popped down into it, so there was an immediate retest and we rejected it and went higher. What happens though, more often than not, if we don't get these retests, we immediately, then we will get them at some point. And it's not been true the whole way through, but it's a good way of looking for liquidity zones of where value might be to tap into. So the next one's down on this 4-hour chart. I know this is a struggle to see. The next lines, which is these pink lines, come off of the high volume. So look, we've got one here, 38 million. That was the highest. That was the highest volume on that candle. And what happened? We came in and we've taken out the liquidity. So this candle was likely hunting the liquidity and volume in this area. We look at this level here, and we go right across the chart, and we can see that we've got a nice batch of, there's over 134 million there just sitting waiting to be tapped into, and again below it you've got another 140 million, so 280 million within this zone. If we wanted to see some fuckery to pick up some liquidation and stop hunts, we could be getting down to these areas, and that would tie in with the weekly resistance that we looked at earlier on, around about the 51k mark. So certainly areas to be mindful of, and maybe mark on the chart as points of interest. So yeah, should we go down, I'd certainly definitely be looking at how price behaves around this area. I'd be looking for a tap into liquidity and then a reversal. If it keeps going, well, yeah, you can see there's a lot of zones here with a lot of volume. If it keeps going, you've really got some trouble on your hands. But more often than not, we'll just tap through the top one or two, and then we might find some balance and fair value before we start reversing the trend. So 51 to 50k potential reversal target should we see the price drop. Another thing I like to look on here is the CVD line, which shows us whether the delta is positive or the cumulative delta is positive or negative, and price is currently sat around 57k. So you can see when we were last at this price, which was around about here on this candle, the price, the volume was minus 62, around about minus 69 million. It was minus 76 million. Price over here is now sat at minus 303 million. So the delta's gone down, but the price has gone up. So the price going up has shown us that market sellers are actually market buyers are actually absorbing the sellers in the market. So the sellers can't keep the price down; they're pushing it up, even though they're trying their best. So that's bullish divergence. CVD goes down, price goes up or flat. there's some bullish divergence there, so that's a good sign that we might be seeing a reversal, which would tie into this momentum here of the 30-minute and the 1 hour breaking through. So short term, we are actually looking really good for a bounce and a move upwards. Okay, next I'd like to take a very quick look at TRDR. This gives you an idea of the bid dominance and whether we could be going up or down in the short term. We've got no bids either side. I mean, the weekend we've got weak volume anyway, so yeah, read into this what you will. Better during the week, but this shows us that there's not much buying or selling opportunity. We've got a bit of selling coming in, so there is some attempts to keep the price down here. Looking at the open interest down below, we can also see that the open interest has been increasing off this last 4 hour candle. So what that means is new contracts and new positions are being taken out, and their prices going up, so their new long positions being taken out. If this was red and price was going up, then that would be short positions closing their position. So if open interest goes up and price goes up, that means new long positions are going up, which means they're going to likely remain long and momentum is to the upside. If open interest goes down and price goes up, that means that short positions are getting their positions closed by the price moving up, and it doesn't necessarily mean price will continue, because new positions or new longs aren't actually being taken out. So a great tool to see reversal, and what we can see is that that's coming straight off the back of that trend line test that we had identified earlier, which I've got rid of. But where are we? Let's just draw that again so we can see. Oh, here we go. Yeah, so the increase in open interest here shows us that new longs are being taken out, bang off the reversal of that dip, and that dip there off that candle where we bounced is actually this candle here, which is bounced off the trend line. So again, that's good for a short term, showing us that we might have reached a bottom here, bouncing off a trend line. New open interest, new orders being taken out, price to go up. Okay, so that's my Bitcoin review. I'll see you next time.